Bitcoin price climbs and Ether rockets 50%. Ether rockets 50% in 5-year anniversary month. What's behind the rally? As Ethereum turns 5 years old, Ether is up 50% over the past month with two main catalysts driving the uptrend, namely DeFi and ETH 2.0. The price of Ethereum's Ether token has seen strong momentum in July. Since the start of the month, ETH has climbed by 50% from $225.50 to $340 on Coinbase. It coincides with a 5-year anniversary for the dominant smart contracts blockchain protocol. There appear to be two key factors fueling the rally of ETH. First, the anticipation of the market towards ETH 2.0 has been continuously building. Second, the explosive growth of the decentralized finance (DeFi) market has upheld the momentum of Ethereum. DeFi and its impact on the Ethereum blockchain. In mid-June, DeFi platform Compound essentially kickstarted the phenomenon called yield farming. Ethereum users would flock to DeFi platforms providing the highest incentives, trying to obtain the highest yield possible. Since then, several major DeFi platforms have emerged. According to Defiples.com, Aave, Balancer, and Curve Finance have $482 million, $291 million, and $263 million locked in, respectively. Consequently, the total value locked in the DeFi space has increased to $3.94 billion. It is up by more than threefold since the beginning of June. The upward trajectory of the DeFi market could positively affect Ethereum for various reasons. The most prominent factor is its usage as gas. When users clog the Ethereum blockchain with many transactions, ETH is needed to pay transaction fees or gas. According to Etherscan, the amount of gas used per day has increased to a new all-time high at above 76 million. The data suggests the demand for ETH is increasing in tandem with the user activity of the Ethereum blockchain. But some experts are skeptical about the sustainability of the DeFi market. Vitalik Buterin, the co-creator of Ethereum, said on the Unchained podcast on July 29 that yield farming is not sustainable. He said, and those guys are not going to just keep on printing coins for people to entice people to get into their ecosystems forever. It's a short-term thing. And once the enticements disappear, you can easily see the yield rates drop back down to 0%. ETH 2.0. Arguably the biggest catalyst around Ethereum in the first half of 2020 was ETH 2.0. In simple terms, ETH 2.0 incentivizes users that participate in Ethereum as it switches to the proof-of-stake consensus algorithm. The POS algorithm would eventually eliminate miners from Ethereum, primarily to optimize and fasten the network. The final testnet of ETH 2.0, which is called Medalla, is expected to launch in August. Afri Shodan, the fork coordinator of ETH 2.0, said on GitHub, before such a mainnet can be launched, we need testnets that mimic mainnet conditions as good as possible. The Schlessi testnet was one of many steps in that direction. The Witti testnet was another. The Altona testnet is yet another. The Medalla testnet aims to be the final one prior to mainnet launch. Meanwhile, ETH futures are also gaining tractions among traders with total open interest climbing to a new record high in July after recovering since the March crash. As ETH 2.0 nears, the demand for Ether could continue to soar, given that it rewards users for staking their coins. The confluence of rapid growth in DeFi and anticipation of Ethereum 2.0 is presenting an optimistic outlook for Ether price. Bitcoin price climbs to $11,200, but three factors hint at a pullback. ETH's rise is justifiably based on great performance towards early BTC promises. Contrary to what many speculators may believe, Ethereum, and not BTC, is the best performing asset class of 2020 in the crypto market. Data from Messari indicates that the average performance of ETH and other Ethereum-based assets has nearly reached 130% year-to-date gain. The Ethereum ecosystem is home to 178 assets and at $40 billion, Ethereum takes almost 15% of the whole cryptocurrency market. Ethereum-based assets have recorded some of the highest gains in the crypto market, especially after the collapse of the crypto market and during the ongoing global financial crisis. Up to 70% of the assets hosted on Ethereum blockchain have recorded gains, including some of the top-performing DeFi applications and stablecoins. In June, ETH's price range was $225, and now, its consistent support above the $330 price mark has enthusiasts aiming for $1,000 during this bull run and higher after the successful launch of ETH 2.0. Longtime crypto assets supporter and founder of New York-based cryptoassets firm Placeholder Chris Burniske said that as 2020's best crypto asset, Ethereum is also the best support system that Bitcoin has. Some may point out that in 1H 2019 and again recently, $ETH led $BTC. I think this has less to do with liquidity mechanics, and more to do with $ETH drumming up interest in crypto that overflows into $BTC. Once a bull cycle gets going, the above feedback loop is definitely in play. Ethereum delivers on early BTC promises instead of competing with each other. Burniske pointed out that Ethereum is complete on its own, and in turn complements BTC, and so the two top assets are not in competition. $BTC rises relative to ETH? That means more $ETH can be bought with each $BTC, typically leading to an $ETH that rises in USD and BTC terms, once $BTC pauses. Burniske added that there's a solid reason behind ETH's tendency in a bull market to always overshoot Bitcoin gains. Since $ETH is more illiquid and higher risk than $BTC, it tends to overshoot $BTC's gains in a bull market, ultimately ending up higher than it started in $ETH BTC terms. Then allowing more $BTC to be bought with $ETH, and so the cycle continues. Furthermore, ETH plays a crucial role in its smart contract technology since many developers haven't been able to build on BTC as much as they would like due to scalability limitations. In many ways, #Ethereum is proving out many of the promises that were made early on in #Bitcoin days, but never executed upon because it's tough to build on Bitcoin. Regardless of what you believe in, all rise in USD with this dynamic. So instead of people pinning the two against each, they should realize that they are complementary assets. When $BTC rallies, trolls point and laugh at $ETH. When $ETH rallies, trolls point and laugh at $BTC. But both miss the point. $BTC and $ETH feed into each other. Been watching this dynamic play out since Q1 2016. The price of Bitcoin spikes to $11,200, but three key factors suggest that a short-term pullback is likely as the BTC rally becomes overheated. The price of Bitcoin (BTC) has increased from $10,995 to over $10,200 in the past 12 hours. But while the momentum of BTC also pushed up the price of other top cryptocurrencies, including Ether, ETH, key metrics and technical patterns suggest the chances of a pullback are rising. Three factors that hint at a drop are the Fear and Greed Index, a potential Wyckoff pattern and major resistance. The crypto market sentiment is at greed. Data shows according to data from Alternative.me's Crypto Fear and Greed Index, the market sentiment is at greed. The index has hit 75 points, and every time the index reached a clear peak, Bitcoin corrected. The last time the index reached a local top was in February 2020, when it reached 65 points. A month after, the price of Bitcoin dropped to as low as $3,596 on BitMEX. Historical data shows that when the index hits a new high, BTC tends to pull back. But the way the market sentiment is measured is highly subjective. For instance, 30% of the index is composed of social media and surveys, which are non-quantifiable data. In a prolonged bull market, cryptocurrencies can stay overheated for an extended period, as seen in 2018 and 2019. As an example, the price of Bitcoin rose to as high as $14,000 in June 2019 before pulling back. Bitcoin faces strong resistance. The price of Bitcoin corrected from the $11,200 to $11,400 range 3 times in the past 3 days. Metrics that suggest Bitcoin's rally is overheated are insufficient on their own. But when combined with a relevant market structure, the argument for a bearish scenario could strengthen. Historically, there has been lackluster resistance between $11,500 and $14,000, hence, the chances that sellers would attempt to defend the $11,200 to $11,400 resistance range remain high. When buyers break through the strong resistance area, the likelihood of bigger uptrend increases. Trader Michael Van de Papa explained that a breakout above $11,200 could trigger a rally to $11,700. He said, crucial threshold is still the $11,200 level. Breaking through and $11,500 minus $11,700 is next. Raphael Schultz-Kraft, the chief technical officer at Glassnode, raised a similar concern. Pinpointing historical BTC price cycles, he said, "We will never see BTC below $10,000 again." Episode 13. Last episode lasted 1 day. A potential Wyckoff formation and a head and shoulders pattern. Meanwhile, popular Bitcoin trader PhilBPhilB suggests that BTC, USD may be forming a Wyckoff pattern, which typically results in a steep downtrend. Although the viability of the Wyckoff formation is contested, when combined with other metrics, the probability of a distribution phase rises. One pseudonymous trader also noted that in the short term, BTC faces a possible head and shoulders (H&S) formation. In technical analysis, the H&S pattern is widely recognized as a signal for a market top. The trader said, "Everyone talking about BTC ripping higher when it's painting the cleanest H&S in its history?" The momentum of Bitcoin seems to be on the side of buyers, as it repeatedly tests a key resistance level. In the near term, it faces strong resistance and two bearish patterns that might cause a downtrend.